I'm sure you were in the markets the last time you had the US election.
Yeah.
As we transition to the next geopolitical event, what were you looking at that particular time?
Well, as per the last US election,
Yeah.
I think the biggest thing that happened was the...
Hi guys, welcome yet again to another episode of Bullish Banter. I hope you enjoyed the last one or you learned one or two things about the last one. Today we are doing something special yet very important, depending on how you, of course, take it. But before we go any further, I'm your host, Jesse. How are you doing, Rufas?
I'm doing fine.
Yes.
Yeah.
So far, so
Nothing
good.
to complain.
Yes, we are recording this on the 3rd of October, last month, or Q3.
Yes.
How would you rate it, How was Q3 for you?
Well, Q3 was, I would say, bittersweet.
Okay.
A lot of markets were more or less sideways.
Uh-huh.
Well, we had some good trend in gold.
Okay.
At some point, you remember last time we had to ask, do you have to be a good trader to make money in this gold?
Interesting. I think this episode will try to answer that.
Yes.
Do you?
Bitcoin still moving sideways. 58K gang coming back.
Okay.
Yeah, it's bittersweet.
Okay.
Yeah.
Interesting. For me, it was a very weird Q3.
Yeah.
It started very nicely with, Keir Starmer, the new Prime Minister UK,
Yeah.
Bullish pound,
Yeah.
bullish UK equities,
Yeah.
bullish UK basically.
Yeah.
And then, of course, whatever was happening in Kenya at the time.
Yeah.
And then we got into, of course, Powell decides not to cut.
Yeah.
And then the market goes crazy, confetti and bombs and everything falling from everywhere.
Yeah.
And I think we have been living on an edge in the market.
Definitely.
Yeah.
Yeah.
And right now, if you do like a proper analysis of 208 to currently,
Yeah.
there is a lot of similarities.
Yes.
Not a guarantee that it will happen like 208 given the circumstances we are in.
Yeah.
But very peculiar similarities. And October is still showing the same thing,
Well, I think the comparison is with 207.
Mm-hmm. Yeah, sorry.
28, yes, the election.
Yes.
In 28 was election this time.
Yeah.
But the first Fed rate cut in 207, 50 basis points, kind of comes in square with what's happening right now.
Yeah. So basically, today we are covering, some of those. If you have not been affected, either positive or negative, you might want to consider it at least for the foreseeable future. Risk management, it sounds obvious, but I think this type of risk is what ideally not found in the stop loss or the risk reward ratio, but more or less you would find it on CNN and you see your MT4 or 5.
Yeah.
Things are either green or red or blue.
Unapata umegongewa.
Yes. So we're covering some of the events that we think will be significant for the next, just not minute, literally, but even for the next Q4 of the year. And we'll start with the first and most obvious risks that has caught people either sideways, especially on 1st of October when we saw, Iran shoot missiles against Israel.
Yeah.
And we have seen, the back and forth over the last 1 or 2 years, tensions escalating. Yeah. Maybe from your observation so far, and of course in regards to market, what are you finding quite interesting and, how can one prepare for them?
Well, normally, from a seasonal perspective, October is usually an up month. We actually call it October.
True.
So there was this big anticipation that the stock market is going to rally in October. And hatujaenda sana, we are still on the 3rd.
Yes.
So the big surprise on the 1st of October, that was Tuesday.
Yes.
Yeah, we basically saw the strike by Iran on Israel, which marked a major escalation,
yes,
especially in the Middle East.
Yeah.
And as we usually say, whenever there is something big happening that is uncertain, something like a major disaster or a major war, investors tend to switch from risk on to risk off.
Yes.
So what we're experiencing here is a lot of investors immediately switching to risk off. And that may explain the current rally in gold.
Okay.
That's the most recent rally.
Yes.
But at the same time, there was the surprise strengthening of the dollar.
Yeah.
having crossed last week around 99.
Yeah.
And now we are seeing the dollar index hitting 101.
Yeah.
It's a pretty big shift in the market.
Okay.
So despite the Fed cutting rates, we have had like 15 speeches from Fed members in the last 1 week.
Yeah, a lot. You look at your calendar, you're like, when are you guys writing up?
Stop talking.
Yeah, or shoot a podcast. And,
So in all these speeches,
Yes.
I think the Fed members are all aligned. While they might be a little bit sensitive on the data,
yeah,
they are all looking to cut rates in the next 2 meetings.
yes,
So probably on the November meeting, we'll be seeing another rate cut and another one in December. So all these signals indicate a very weak dollar.
okay.
But now the major escalation in Middle East
Yeah,
is shifting things over, and now we are seeing a very strong dollar in the market.
Yeah.
And I think this is the one time you need to be like uptight with your risk management.
very true, very true.
Yeah.
I think on that particular day, oil moved from down 2%
Yeah.
to close up almost 5%.
Yes.
That is not a normal volatility day.
Yeah.
And I think for any trader out there, you might want to have, if you're on X, have something to show you about price movement, or follow the relevant websites or personalities.
Yeah.
That if you see a weird move not screened on either the economic calendar,
Yeah.
just go and check what is happening.
Yeah.
For me, I prefer to use Financial Juice.
Yeah.
I have an account there.
Yeah.
I if anything happens
Yeah.
in the market that is not normal,
Yeah.
I quickly look at it. It will be highlighted in red,
Yeah.
and then I'm good to go. But I have a couple of Twitter handles that I follow, and I usually retweet.
Yeah.
So those who follow us on Twitter, it might do you well,
Yeah.
just to know, okay, today is this, or even engage us directly. I think that can be a good thing.
Yeah.
And I know it is not just the Middle East issue.
Yeah.
I still believe the China-Taiwan issue is still at play.
Yeah.
I still believe, of course, in terms of Ukraine-Russia is still at play.
Yeah.
So one might want to watch on to that, especially as we approach the U.S. election. Change of guard brings, power horse vacuum.
Yes.
And therefore, any trader, maybe when you say risk off,
Yeah.
I don't know, I'm sure you were in the markets the last time you had the U.S. election.
Yeah.
As we transition to the next geopolitical event.
Yeah.
What were you looking at that particular time?
Well, as per the last US election,
Yeah.
I think the biggest thing that happened was the Capitol Hill event.
Yeah. 2 months later.
Yeah.
Uh-huh.
It was completely unexpected to see US elections being contested and
Yeah.
people on the streets. That was a little bit tough. The other thing is, of course, COVID.
Yeah. Yeah. True.
Yeah.
True.
So COVID was currently happening. So everyone had promises about how fast they are going to roll out the vaccines.
Yes.
Whether there should be complete lockdowns.
Yeah.
Whether they would reopen the economy and all that.
Yeah.
So I think the biggest winners as at that time were Zoom and pharmaceutical companies.
Pfizer, Moderna,
Yeah.
etc.
So at that point, this is when we were having that period. Still in 2020, this is when there was an oil price war
Yeah.
between US companies and OPEC.
Yeah.
And that led to a big sell-off. And remember around April, this is when we saw oil trading negatively for the first time ever.
True.
Yeah. So there's a lot of similarities with today. For instance, if you look at the oil market, there's about to be a war, and not a physical war. It's basically a competition for market share between the US and the OPEC Plus guys.
Yeah.
So far in their last meeting on Wednesday, they basically talked about expanding their output in the near future. I think that should be from November
Towards December, at least to increase it by 1 million.
Yeah.
And then do a major increase around March next year.
Yeah. So if you really check and try to understand why they're increasing, I don't think demand is that high in the market.
Yeah.
So it's more of a fight for market share between the US and OPEC.
Yeah.
Yeah.
Okay. Interesting. It is interesting that during an election year,
Yeah.
a lot of things tend to happen.
Yeah.
And if you're not maybe, aware and therefore adjust maybe your strategy or risk approach to such,
Yeah.
you will always be wondering maybe what is happening. And I think that is something that you cannot really say blame anyone
Yeah.
or yourself.
Yeah.
You can only try to minimize the damage. I think
Yeah.
there is blood on the streets. Make sure that yours is not one of them.
Yes.
Now, are we likely to see now that you mentioned the dollar strengthening right now, all this going on, and the very clear similarities between 2020 with the global pandemic? There was no war.
Yeah.
Right now, we are in the brink of it. I would not want to say war. I hope and pray that peace prevails, because it can be, even the way we are just recovering from COVID, it can be really punitive to a lot of people's livelihood.
Yeah.
Are we likely to see whereby, with uncertainty going on, dollar gaining value while also gold rallying?
Well, I expect to see both happening at the same time.
Okay.
So
break off of the normal relation.
Yeah, you will notice that out of people will be converting, let's say, their profitable positions into hedge.
Okay.
Maybe they go cash US treasuries.
Yes.
Some other people may prefer to go for gold.
Yeah.
Especially considering the current performance. Being up 30% year to date is not a small thing for gold.
Yeah.
So what I'm expecting is that people eventually price in war. We saw this happening when Russia invaded Ukraine.
True.
So immediately there was people were scared, they were uncertain, and then oil shot to $130 per barrel. Later on, it ended up erasing all those gains later in the year.
It was actually 57.
Yes.
I think that was sometime last year, and then right now it has stabilized between 6. Interesting.
Yeah. So, well, right now everyone is worried about what's happening in the Middle East.
Yeah.
The war in Ukraine is still continuing.
Yeah.
But nobody seems to be worried about the war in Ukraine in the markets.
True.
Yeah.
Correct.
So you realize that people have already priced it in, normalized it, and now the markets are trading as usual. So there's a chance that we could be seeing a similar thing happening in the Middle East.
Yeah.
So if there's an escalation, we see the dollar index strengthening for a while.
Okay.
For gold, I think it's a long-term trend.
Yeah.
So it's not something that it just started rising because of the war.
Yeah.
So we could be seeing gold extending its rally.
Mm-hmm.
But by the time we are getting to the next meeting by the Fed, that should be around November 7th.
Yeah, just the next day after election.
Yes.
The next morning.
Yes.
So in Kenyan time, it will be maybe the next afternoon.
Yeah.
Towards evening. Should be a very interesting day.
Yes.
That Tuesday and Wednesday.
Yeah.
And for our listeners, our space is coming towards the end of the month, covering U.S. elections, perhaps a breakdown on their policy in a way that makes you understand, especially if you're new, good to know.
Yeah.
Hopefully you'll trade the next election or even with the midterm elections.
Yeah.
Okay, go on.
So for me, I think for the dollar index,
Yes.
we could be seeing the rally extending for a while, maybe for a week.
Okay.
And then eventually we start seeing the market pricing in the rate cuts.
Okay.
And the dollar index starts going back down.
Okay.
So it's definitely going back to 99 in the near future.
Interesting.
Yeah.
Maybe something that you mentioned about, the technical price levels.
Yeah.
During these volatile sessions whereby there is all this coming from the news and everything, the market reacting volatile-wise, do price levels, let's say the technical side, still play the normal roles that you use maybe to exit market, to enter market, for those who use price action, for those who use SMC, for those who use ICT? Do those rules still apply whenever there are all these factors happening everywhere?
Well, they still do.
Okay.
You'll notice that if you're looking for an entry on a certain support, resistance level, or conference level, FVG, or whatever you might call it,
yes,
you realize that it still plays out in the same exact way.
Okay.
The only difference is, let's say you have a market that is consolidating, maybe moving sideways for a week, waiting for non-farm payrolls or a Fed rate decision or something like that.
Yes.
When it eventually breaks out and heads to the next support or resistance level, you realize it happens so fast because of news that it's even harder for you as a technical trader to capture the move.
Okay.
So, well, on a normal day without news, a breakout will happen easily. You'll wait for confirmation, make your entry.
Yes.
It doesn't play out in these volatile times. So you'll notice the market just hitting a major support and bouncing immediately, moving to the next resistance. So, well, on one hand, the technicals still play out. I think what increases is the risk. So in a volatile market, the risk increases.
Okay.
That's why I would explain the difference between trading a quiet pair like Euro USD versus trading gold.
Okay.
Gold is much more volatile and hence it's more riskier. Yeah, but of course, it's a high risk, high
Reward kind of trade.
So the higher the volatility, the higher the risk, but also the higher the opportunity.
Excellent.
Yeah.
If for those who are trading at least as early as 2020 or even way back, I'm sure you have experienced emergency, central banks cut hikes and all. I know we will get into currency, not even currency, but rather central bank. There'll be a space by the time this is done.
Yeah.
We'll try to record it and then share it. Some of how to analyze the central banks. If whatever tensions goes on, issues with the demand, I looked at today's Swiss numbers.
Yeah.
Inflation is basically below 1%.
Yes.
I am sure they will do a lot of stimulus to push that inflation back to at least 2%, which is weird.
Yeah.
But, and China as well. So low inflation, high savings rate.
Yeah.
But they have done a lot of cash injection in terms of cutting mortgage rates of existing those who are holding mortgage rates, reducing for those new applicants, and obviously even for banks, they are giving them basically free cash.
Yeah.
What do you make of that, and how does that Chinese stimulation play to the global markets, and which assets maybe would you say can be benefit from that?
I think China is a weird market.
Yes.
It's very different from the usual markets we have in the West.
Yeah.
In that, when you think of China and its high population of 1 billion people, the biggest asset you can own in China is a house. Like you have 1 billion people that need houses. So over 60% of Chinese workers are heavily invested in the real estate sector. So that's where they have put their savings, their investments, their retirement funds. They are all in the real estate sector.
Yeah.
So when we were looking at what Country Garden collapsing last year, Evergrande also collapsing, it was an industry-wide trend. Those were like the biggest real estate firms in China.
Yeah.
So they were unable to pay their bonds, and their stock market prices collapsed. Also, there was that contagion effect across the entire real estate.
Yeah.
So right now, China is having this challenge where on one side inflation has dropped. It's within range. I wouldn't say like they're in deflation, they're not.
Okay.
If you look at interest rates, they've been cutting.
Yeah.
They adjusted the reserve ratio the other day.
Yeah.
Which basically allows for more funds to flow into the Chinese economy.
Okay.
We saw the stock market making double-digit returns.
We are now almost 30% year to date.
Yeah.
Within a week.
Yeah.
Others have been doing it since January.
Yeah.
They said, okay, we'll catch up with you. We'll go alone, not together.
Yeah. So what I'm seeing in China is that a lot of investors who realized that the real estate market is in a bad mess.
Yeah.
They started rotating and started buying gold ETFs.
Yes.
So that has been the trend over the last 1 year.
Okay.
So crazy demand for gold ETFs.
Yeah.
Then the rest of the BRICS followed.
Yeah.
India made like one of the biggest surprise purchases of gold. Or other BRICS economies are still buying gold.
Yeah.
And that has built a very strong trend. So now that we are seeing China injecting some cash into its system, and real estate is about to recover, we could be seeing investors rotating outside now moving from gold back to Chinese equities. We already seen, who is this guy?
I know we will share it. I remember the name of the guy. I forgot.
The big short guy.
Yeah.
He basically put millions into Chinese equities when they were at all-time lows. I would say 4-year lows. And so far, he's getting some good returns, especially on Alibaba.
I think he made almost $1 billion, right?
I don't know if it's yet.
Because he has not cashed out, they're in billions. Yeah. Because, 20% and Alibaba, I think, is up from around 95.
Yeah.
Of course, disclaimer, I bought it at around 85, if I'm not wrong, and I sold it at around 95.
Yeah.
Yeah. So I think I was confident for some reason about Alibaba and how they have been expanding in terms of their cash flow and all.
Yeah.
But I'm looking at it this way. Yeah. If the Chinese economy starts to rebuild and, given if I've listened to some interviews about the investors in China, they say they are quite aggressive, unlike maybe Americans or anywhere else. If they were going to to Bitcoin, they would go in big and in cash. Chinese are rich people, at least. If you have a billion people, that's a billion customers that you are selling to something. And therefore cash is rotating. And also they have a very good habit of savings aggressively. So they have free cash and therefore savings is going well. You can now invest in other high risk reward sort of asset. And I was looking, we talked about last quarter in August, we had the reverse trade with Japan. Right now with their new prime minister, I think they are done with the hike. Inflation came yesterday and it was quite pretty stabilizing. I think they'll maintain it for maybe a few, and then we are going back to the reverse trade. Now, if China is stimulating, the world will stimulate. Why I'm saying so is because people will start going back, and the Chinese will start investing in their own market because they feel, okay, made almost 300-400% of NVIDIA for the last 3 years. Why not take some, ride this way for another maybe 2 years? And then when our time comes, I'll go back to NVIDIA, buy it at cheap, and then move on. I am seeing a potential rotation in the future, not a full exit, just a, cash allocation back to mainland China, and that will allow them to have sort of a proper, well-diversified market set for growth.
I think it's already happening. You remember the template that we had in 2020? Where US inflation was low. They cut rates to near zero. And then they printed loads and loads of cash. Which basically built this asset bubble where a lot of money found itself into the stock market, into crypto. This is the time you saw someone buying a photo of a stone for $1 million. Like somebody even bought that was Jack's first tweet on Twitter. As an NFT. So you find these crazy investments happening when there's easy money. So China is headed there. They have already started printing. They are currently experiencing low inflation, and interest rates are just being reduced. So far, I think we have seen 3 cuts this year. So this basically implies that China is headed into an age of easy money. And this money will find some store somewhere. So most probably you'll find that people go for goods that are harder to find, and things like real estate boom. We could be seeing commodities in China, which are key. Things like rare metals, copper, iron ore, all going up. Mainly because there's excess money chasing after the same goods. True.
I think it will be, already most of the commodities are already up since that stimulus. And if you look at AUD USD, which is largely a commodity-based currency, has already responded. So, one thing that I said last time, but you are like, oil. So we'll see how that plays out. But I think besides the normal fundamentals that people look for oil markets, the global tension still plays a part. To the most important bit of this conversation, maybe from your side, what tools or websites, or if you have individuals, do you follow to just understand some of these events? And maybe given that some of them emerge out of nowhere anytime, and then you're able to synthesize it to an actionable plan or risk management. Where do you get some of this information?
Well, I think one comprehensive website is Trading Economics. They have loads and loads of data. The website itself is an aggregator. So it basically collects news from different data sources. And mainly it focuses on statistics bureaus across the world. Central banks and other major institutions that release economic data. So you're able to see up-to-date information ranging from news, market quotes, charts, indicators, as well as an economic calendar. So far, I think it's one of my best resources in trading. I think we'll share the link in the description below.
Definitely.
So Financial Juice is also good for giving like major and immediate highlights. So I tend to follow it a lot. There's another website called Kiplinger. Kiplinger is
the stock market website.
Stock market research website. They do some good analysis on earnings. So anytime there's earnings for a particular week, they will show you a brief highlight, which ones are the important ones, the outcomes, projections. So I think it's a pretty important resource in trading.
For me, I would say mostly sometimes Bloomberg.
Yeah.
So, checking out, especially,
of course.
yeah,
Okay.
they bring some of either former central bank governors, current governors, and when they say what they say, it can give you an idea, okay, maybe nothing is about to happen or something is about to happen, or better yet, they have experience in different eras or certain situations in the market that I might not really understand. And therefore, when they say it, you're able to know, okay, maybe when I see this in the future, I can be able to deal with this that way. Of course, financial juice. X is also a very great source for me.
Yes.
So I have a few, accounts that are created like a list. So on that list, you're able to see real-time updates. So for example, if I want to know what is happening in the commodities market in general, I will have a list for oil, I'll have a list for gold, I'll have a list for maybe, new technology, like right now, nuclear energy is coming up. You're like, okay, how does this work? What is the cost pricing? So just to keep yourself informed, even if we are not experts at this, but we are really, you're able to learn from real participants in the field.
A quick one.
Yes.
Do you follow Walter Bloomberg?
Yes.
Zero Hedge?
Yes.
No.
Of course. Those ones are a must. Those ones are a must because they are good for those rapid, they are like
updates.
They are like alerts. Yeah. Isn't it interesting that right now we are in the earning seasons? NFP is coming tomorrow. But if you look at the financial markets, NFP is like an anecdote. By the time this is coming out, I know we'll already have seen what NFP has done. And hopefully how the situation in the Middle East has escalated. But I believe this can be a very interesting, information for those who are learning to trade.
I think this week there's been a lot of focus on war stocks.
Yes.
These are companies that majorly supply the US with weaponry and any ammunition. So if you look at aerospace and defense,
Lockheed Martin.
I think like on Tuesday when the market was really going down, it's only the energy sector and the aerospace and defense that was up. So that might continue to be a theme maybe through into next week.
Definitely.
Sure.
I guess just as an information, we will try as much as possible to, of course, Rufas and this team on the daily market snapshot can share any update necessary, but we'll always in between the month of October or through to December, share and organize maybe a specialized edition and try to bring in another guest as well and share any resources that can be of value to you as well, either our listeners and of course yourself as a trader. Any closing remarks?
Well, this is on EPL.
Yeah.
So having hit game week 6, I think it's time we start congratulating the leaders of the league. So far we have Strikes FC or Bonito Teach with 61 points last game week. To a tally of 424. Whoa, this guy is beating me by a while.
Right? Gold is making sure, as much as it's beating people on FPL, I hope the markets are also, quite generous to you.
You can see as a Knights is top 2 and top 3 is Whispering Wood. So guys, keep going. I think we will catch up here. Maybe in the second leg, but at some point we'll catch up with you guys. So, fun fact, if you haven't joined the Bullish Banter FPL League, you can find the link in the description below. And once you join in, make sure to be very active. We'll be having some few goodies at the end of the season and at the end of first leg as well.
Hopefully we'll organize a meetup. As for myself, check out our socials. That is FXPS Official, Ogola J4, Rufas KE. I almost said Rufas FX. On Bullish Banter, we will be organizing some special spaces as days go by. Hopefully just to keep you informed, know how to manage either your risk or capitalize on any opportunity you see. As usual, do not hesitate to share, like, subscribe, and ask your questions on the several DSPs you used to listen to Bullish Banter. Good day.